Hello, everyone, and welcome to another episode of Decrypting Cryptocurrencies on Financial Express. And today I have with me Gaurav Dahake, who is the founder of one of India's largest cryptocurrency exchanges, BitBnS. And I think it's not a better time now to talk about cryptocurrencies because you have Bitcoin back in the news. It went up, it went down. And today, as we speak, Bitcoin is down nearly 40% from its highs. And all this is making investors a bit jittery. And so I thought it's a good time to talk about investment in cryptocurrency. And starting with Bitcoin. Gaurav, what's your take on the way Bitcoin has been moving? Because in the last few days, it has seen highs and it has seen lows driven mainly by news.
Right. So, to a large degree, Bitcoin usually moves this way. The thing is, you need to understand that Bitcoin as an asset class is a smaller asset class as compared to other more established asset classes. So, what happens is the more established asset classes, as in where it has traded for a longer period of time, the volatility is lesser. So, gold, the volatility is really, really low. Stocks, it is higher, so on and so forth. And crypto is just a 10, 12-year sort of old market. So things kind of move a lot faster. One is it operates 24 cross 7. So even if the news read at 3 a.m. in the morning in India time, it might be an afternoon time somewhere else, and the people would take action based on that news. And crypto also kind of serves more like almost every single crypto user is on Twitter, and Twitter is kind of the information dissemination platform for a lot of these sort of events. So that kind of amplifies a lot of the things that kind of happen. So anything that happens in China or US or anywhere else also affects the market. So that's how it is. It has been. Overall, still, though, like crypto operates in a 4-year sort of cycles. There are bull runs and then there are bear runs and all of that. We still don't have a bear market sort of a structure that is formed yet. Things are still optimistic, but we are seeing a lot of changes in the market as to how things are kind of operating.
But this brings me back to the question. With equity, you have some fundamentals backing it. With gold, people are seeing it as a store of value, and they
Sure.
were talking about cryptocurrency, especially Bitcoin, to be seen as a store of value for the long term.
Right.
But it takes some kind of investor appetite, or to be
Right.
able to stomach this kind of risk in
Right.
Bitcoin.
Well, yeah. So, to a large degree, a 40% drop kind of breaks a bit of the store of value sort of narrative. Here, store of value wala narrative exists karta hai nahi, right? But if you kind of put that into perspective, right? So, Bitcoin has appreciated 100 times with respect to gold in the last 5 years. Now, if gold is a store of value, and with respect to that store of value, Bitcoin has appreciated so much, then how are we kind of placing those bets, right? So that's how that in the short term, this sort of a dip kind of feels really, really large. But Bitcoin has had these sort of 30% plus dips almost 7 to 8 times every single year. And it's not just here, it has happened just this year or something of that sort. It happens every single sort of year. Typically, these dips feel a lot more pronounced in terms of bull market years like 2017, 2021, and so on and so forth, because it kind of gets into a lot into the eyes of mainstream media, right? Here, a lot of mainstream media has covered it. A lot of new users have come in, and those new users kind of feel very stuck here. What did I do? I just invested when Bitcoin was $55,000. Now it is $40,000. So it is very hard for them to kind of stomach that sort of a delta in terms of price movement. Overall, like in terms of value, right? Why does Bitcoin get value? One is the decentralized nature that it has. Only gold has that sort of a nature, if you kind of talk about it. It is transmissible, like you can transfer it anywhere across the globe. So 7% of Mexico's remittance right now happens via crypto. So that is a lot of utility for oppressed sort of nations and regimes, where it is kind of driving value, where their own fiat currency is not stable, Iran, Turkey, and a lot of these sort of jurisdictions. And the third part of is Bitcoin is the largest asset in terms of overall cryptos. So Bitcoin also serves as a collateral for any kind of trading. Here you are depositing Bitcoin, from there you are trading. So some of these aspects do drive value to Bitcoin. And a lot of them are kind of long-term holders who have bought Bitcoin earlier. So, but for a person who's entering now, they should kind of figure out their risk appetite. For a person who had bought Bitcoin when it was $1,000 or $5,000, their risk appetite would be drastically different from someone who is buying it at
Correct.
$40,000 or $50,000.
Yeah, but this raises the question then, shouldn't a regulator then step in to protect investor interest? And that's exactly what the government has been talking about also, regulating
So,
Bitcoin.
so, so that is something we have also been kind of really, really keen on. We kind of right now self-regulated. We've been kind of trying to work with the government and trying to create a sort of framework here. How do we ensure investor protection is kind of done? Things are growing dramatically over a period of time, and we'd want to ensure okay, we remain compliant, and we kind of also ensure that investors' interests are protected. One of the ways to kind of do it is we kind of give nudges when a user is if a user's usual wallet balance is 50,000 rupees and he's at once trying to invest 50,000, we give him a nudge care. You should not invest this much at once. Start trading with a smaller amount. Or we've created products like an SIP, where an SIP average still for users who have invested is less than $15,000. So I've been investing for the last 8 or 9 months, right? Vis-a-vis someone who just kind of at once bulk invest, there is a lot of difference for that. So we've tried doing that. Now we are seeing serious sort of interest on the government level in terms of regulating this, and we're kind of really optimistic that this would happen as soon as possible.
Right. And there's also the question of liquidity, because on one side, of course, taking your investment out from what you've done in cryptocurrency. And on the other side, now banks are reluctant to give money to investors to actually put into cryptocurrency. So how do you see that playing out?
So currently, yes, a couple of banks have done that. Not all banks have kind of done it, and we kind of try and tell our users that do not link your actual salary account or an EMI account to using crypto trading, because if something of that sort happens, like a restriction on your bank account, that might kind of be detrimental. Your EMI nahi kat pa raha and something of that sort. So we like here create a different account and use that for kind of trading. If you can kind of make the bank aware while creation of the account, that this is what it is going to get used for. And if the bank is comfortable, then kind of go ahead kind of creating that account. So that has been the stance. Right now, banks do not have any sort of logical reason to kind of give that or kind of restrict thing, because there was a Supreme Court circular that kind of came in.
Correct.
And we've tried kind of telling banks around that, but we're not getting anything in writing. If they're kind of curbing the account, we are saying give that to in writing that you're doing this because of this. But we are still seeing that this is happening with roughly around 1 or 2% of the users. 98% of the users are still freely able to trade. And we're kind of hitting new peaks in terms of deposits, withdrawals, or trading every day.
Right. So, I mean, Bitcoin is still a fairly expensive asset, and people who are entering are buying 0.001% or 0.001 Bitcoin right now, BTC. But then there are so many others which are seemingly affordable. Case in point being Dogecoin, again driven by one man, Mr. Elon Musk, who has driven Bitcoin to its peaks and brought it down. And even Dogecoin, I think his tweets have been the main reason for it rallying. Right.
Right. So, like Dogecoin has kind of gone up roughly around 150, 200x in the last sort of 7, 8 months. And one of the primary reasons, of course, is Elon kind of driving through some of the tweets that have happened. Surprisingly, though, like as in, I would say, it is not something that you should kind of get into predominantly because of the fact that yes, Elon has been influential. He has kind of also done this for Tesla stock or some stocks earlier, and he's kind of got penalized from the Securities and Exchange Commission. When you have 55 million followers on a particular social media platform, and if you kind of use that to a certain effect, that is going to kind of have certain value. And essentially, though, I would suggest newer investors to kind of stay away if they're kind of looking at a long term, because an asset that has already appreciated 150 or 200 times in a span of 7 to 8 months is not something to kind of get into. Especially considering when there is no fundamental value linked to it, right? For Bitcoin, I already explained what is the value creation. It's used for remittance. It is used for as a trading sort of asset, collateral, and some of these sort of things. That's not true with something like Dogecoin. And the faster they kind of appreciate it, there is a very high chance they might kind of drop equally fast from there.
Right. And what about the new interest now that's coming in NFTs, non-fungible tokens? We saw one trending on Twitter last evening, which was Richie. It was the number one trend in India also.
Right.
Drive it to the moon and back. So
Right. So overall, crypto is kind of getting mainstream. We're seeing that with respect to a lot of the metrics that we kind of track. And it is kind of getting mainstream, not just with respect to kind of investing or on the speculation side. It's also that people are discovering what is decentralized finance, what is NFT. NFT stand for non-fungible tokens, and the overall value that it kind of drives, right? If suppose you have Mona Lisa painting at your house, you would want to show it off to 5 or 10 different people, right? But but if you can digitally prove the ownership of some of that sort of an asset, you can kind of show it across to the world. Here, I own this sort of an asset or art, and this is what it is, and there is provable it could be provably verified that this I own singly own. So that's there. So that is kind of driving a lot of these NFT hype per se. Some of it is value, a lot of it is kind of hype. But the value creation kind of keeps happening over a period of time, and that kind of drives the market forward, right? So that has typically happened with Bitcoin. Bitcoin last time went to 20,000, then went back to 3,000. Now it kind of went to 60. It is down at 40. It might again go up and go to up to 100,000 and kind of start dropping back from there. But overall, the next sort of dip is larger than the last peak. So this is what typically happens. So 2013 is when Bitcoin went to $1,200 and it got back to $200. Then it went to 20,000. Then it went back to 3,000. It never went below 1,200 or something of that sort. And this is what is being anticipated. It would get back to somewhere around 35 or 32 or something of that sort. It would never go below 20,000 again.
right. But it's also fairly easy now for even exchanges to come up with their own tokens and coins, or for that matter, anybody can come up with their own digital currency.
Right.
So, don't you think this is going to kind of create some kind of clutter or confusion in the market as to what to invest in?
True. It would. So I would suggest that most investors should kind of stay away from a lot of these tokens. Like invest in something that's kind of more tangible, and you kind of understand what is Bitcoin. Ethereum is a pretty good alternative. You can also hold USDT, which is kind of alternative to that, and you can earn from lending from there. Now, in the newer tokens, try and understand what is the total supply, what does the team look like, question the team aggressively, what are the future plans, have they delivered on the last things that they promised, is there an actual product, and some of these sort of things. So a lot of the people can wear like a VC hat or something of that sort. It is tricky. It is definitely kind of hard, but do not invest. If you're thinking of investing $100 into crypto, do not invest more than $5 into something like this. With a newer set of tokens or something that is kind of coming up, benchmark them on a lot of aspects and then try and kind of invest a small amount from there.
Yeah. So that brings me actually to my last question that I had for you. What kind of an investment strategy would you suggest for somebody who is interested in the cryptocurrency market but is getting into it for the first time?
I would say SIP. Start with an SIP in something like Bitcoin, Ethereum, or some of these sort of assets. Because the point is, when something dips also 80%, right? If you're taking a trading sort of a decision, you'll kind of more likely make mistakes, right? So an SIP would average it out really, really well when the market goes down. And overall, if the market is growing, right? So crypto market in 2015 was 10 billion. It went to 100 billion in 2017. It is now $2 trillion sort of a market, right? So it is on a growth sort of a path. There would be dips. There would be 20%, 30%, 40% sort of dips as well. But that's where you kind of accumulate more using an SIP sort of a strategy. And I would suggest for anyone who wants to kind of take an exposure, start with an SIP sort of a format.
Okay. You wouldn't call this gambling, because a lot of people who are hardcore equity market investors think of cryptocurrency as a gamble, or like a gambling market.
Like a person who does invest into fixed deposit says, "Kya, stock market is a gamble," right? So the perspectives change. My perspective is that here people make a lot of generations make wealth in different formats. 1980s, 90s, it was real estate. 2000s, it was stock market. 2020s, it is cryptocurrency, and so on and so forth. The generational wealth for format kind of keeps changing. Millennials, Gen Z would have that sort of a format where they probably would make more returns on crypto as an asset class, because it's a lot of social media driven sort of an asset class, more youngish sort of a crowd, which get influenced really, really quickly by some sort of a messiah like Elon. So there is a lot of things that kind of are, and that's precisely why older people, or say people who are elder that way, 40, 45, 50, and all of that, they feel that this is trash. Like this is something that is scam or gambling. And that's true. Like even I feel Instagram is not something that I spend a lot of time on. Someone who's 25-year-old might feel Snapchat is not something that they are comfortable with. 20-year-old TikTok, वही है कि वो होते रहता है कि किसी को TikTok नहीं comfortable लगता है. As age progresses, वो सब जो बहुत flimsy चीजें होती है वो valuable नहीं लगती है. But it is a function of care where the youth of the world is kind of concentrated. And right now it is cryptocurrency, and they are going to take major decisions over the next 15, 20 years, and that would drive where things go.
Right. Okay. Thank you so much, Gaurav. So that was Gaurav Dahake of BitBnS. And as usual, this comes with a disclaimer. Investments in cryptocurrency are subject to risk, and do so at your own peril. Um, Obviously, you got to study the market, understand it before you take any such decisions. Thanks for watching.